Good morning and welcome to Beyond the SEAF model. This is effective for August 12th, 2024. Let's get started. SEAF signals for this week. We have utilities, real estate, and healthcare. Healthcare coming in new for this week. Really being driven off of a strong tactical month, relatively strong strategic quarter, but coming in fifth in the trading week with the 11 overall ranking. Real estate remains relatively strong, and utilities with one across the board is the highest ranking we can get. Couple of things to kind of note from here. Financials continues its drop off, being held up by its tactical month and strategic quarter, but number 10 in the trading week. And then also seeing consumer discretionary pretty weak across the board. And a little bit of confusion up here in technology as technology has rebounded after its kind of steep decline. Seeing this the trading week of 2. We'll highlight this a little bit more in the rainbow charts, but as we've kind of talked about in the past, we don't always bite on these trading weeks for some of that money that can kind of flow in on a particular trading week can be kind of get you offside. So the reason we have this model, the reason we use 3 time periods is we really want that money to build up some momentum and not just trade on the whims of the week. But the flow for technology was relatively strong, so we are going to keep an eye on it. And again, outflows are relatively weak, were relatively strong for technology going in the past month and the past quarter. So it'll just be something to keep an eye on. If we can string a couple of these technology weeks together, we'll start to see technology ride up through the rankings. But as of right now, still in the neutral territory and something to kind of ignore at the moment. Heading into our heat map, utilities really strong, slightly under average for the trading for the week, 0.32% for its inflow. Technology, though, relatively strong for the second position at 0.27%. We are seeing this clumping of green that I like to see, which that kind of tells me that we're trending in the direction that we're looking for. We don't have too much up and down movement with the exceptions of financials and technology, which if this continues could be in the midst of a trend reversal. Otherwise, consumer discretionary showing some weakness and energy kind of flailing itself back to the bottom here with a weak trading week. Overall, kind of looking at the overall flows of last week, we were net down last week about 2.3%, but that was very kind of up and down. We saw 1.5% up, 1.5% down, 1% up, a couple of half a percent, quarter percents down. So it was very money was not consistent last week, which, to me kind of screams an inflection point. People are still trying to figure out where to go. Are we going to rally off support or are we going to crash down through it? So, the numbers are kind of showing us at a inflection point. But what we can tell you on the SEAF model is utilities remain strong, real estate remains strong. One thing, I don't always bring this chart up, but this is the sector ETF asset flow model using a weekly chart over the last month. This is the percentage of, if you treat the 11 sector spiders as a pie, this is the percentage that each sector holds as a pie. And the thing I wanted to highlight here is we had financials kind of take up over healthcare going back in the sometime between June and July, and healthcare is coming up and trying to retest financials for supremacy of the second spot of percent of assets invested in SPY. So that's kind of unique to see here. We also have real estate recently taking up consumer staples and utilities recently taking up consumer staples and real estate trying to break away from materials. So these conversion points are interesting to me. A lot of this can be a little bit of noise, but when we start to see these things trend in the right direction and take over for other sectors, it tends to be a little bit of acceleration off of it. So that is just something to kind of note. Nothing big here, but I found those interesting for this week. Looking into our rainbow charts, consumer discretionary stays in that deep avoid ranking, seeing that in the relative underperformance, as we kind of peaked into favor, then right back down to avoid. Relative underperformance versus SPY pointing in the right direction. And again, say this ad nauseum, but what SEAF allows you to do is to understand not only where to be invested, but where you shouldn't be invested. Money is flowing pretty strongly out of consumer discretionary. It is resulting in relative underperformance, and it is a place to avoid. Heading into healthcare. As you can see here, healthcare, like I've talked in the past, kind of trades in chunks. We see a little bit of more movement in other sectors, but healthcare a little bit more stable. So we have potential for some favor to be gleaned here. We are picking up some relative outperformance as we've trended from avoid to neutral to favored. Healthcare is one of our SEAF signals for this week, and we're going to look for continued strength here as long as we can stay up in this favored ranking. Again, this weekly chart didn't show a lot of strength, but we saw a lot of strength on the tactical, which is the monthly. So looking for healthcare to continue its hopefully continue some strength and pick up some extra percentage points in the coming weeks. Financials. Just wanted to highlight here as we're kind of headed toward neutral here. Financials is being held up by a strong tactical month and strategic quarter, but the weekly is resulting. We've seen a little bit of relative underperformance here. I think we're at a little bit of an inflection point for financials. If financials kind of strings together another couple of these weak trading weeks, we could see the underperformance really start to show. But we are trending in the wrong direction after picking up some nice outperformance over the last couple of weeks. Looking at real estate, real estate is again another one of these slow-moving trends. We're going to potentially sit here in favor for a minute. We have picked up some relative outperformance as we've headed into favor. It's a place to watch, but real estate relatively consistent flows over the course of the 3 time periods, and we are picking up that nice relative outperformance. Last but not least is our utilities. Utilities has been strong. Utilities really has been the place to be. It's been outperforming the market on a year-to-date basis now due to this nice rally that we've had over the last couple of, this nice relative outperformance that we had since the beginning of July. It is as favored as it can be. So utilities is definitely looking strong. That is all I have for this week. I look forward to breaking the SEAF model down with you next week, and thank you.